You've got PCS orders to Fort Carson, or maybe you just landed your brand new job here in the Springs. You have been saving up, you are tracking your housing allowance or your salary, and you are ready to buy your first home. But here's the problem. There are some things first-time home buyers totally overlook that can waste their time and a lot of their money. So today, we are breaking down the 4 brutal mistakes first-time homebuyers make here in the Springs and exactly how you can avoid them. So let's get into it. My name is Chrissy Terrell with Think Realty, and whether you're just like a military member relocating here, or maybe you're a local professional looking to just put down some permanent roots, I have made this video specifically with you in mind. All right, so mistake number 1, the fixer-upper reality check. This one kind of hurts me the most because I just see it all the time. You fall in love with a house that's listed for maybe like $375 and it looks cute online. The pictures are pretty decent and you're thinking, we can fix this with just a little bit of love. No big deal. But let's just do a quick reality check here. For my military friends, here's something your lender may not have explained. The VA loan has something called the minimum property requirements, so the MPRs. The VA mandates adequate heating, functional windows, and a modern electrical system. So a house with like peeling paint, a roof that needs some serious work, or maybe a broken handrail will not pass. Now, don't confuse this with the standard home inspection. This happens during the VA appraisal. The VA doesn't just care what the house is worth, they care if it's safe. If the appraiser sees peeling paint or an older home, they see a lead hazard. If they see a missing handrail, they see a fall risk. These aren't just suggestions. The VA literally will not fund your loan until these safety issues are fixed. But even for my civilian buyers using their FHA or their conventional loans, Colorado Springs is extreme weather territory. If you are buying a fixer-upper with maybe like some shifting foundation or maybe hail damage, you aren't just buying a project. You are buying a money pit that might be totally uninsurable in 2026. In 2026, Colorado insurance companies are not playing around. If that fixer-upper has a roof that's 12 years old or maybe a foundation that's kind of shifting, it honestly just might be uninsurable. That means no insurance, no loan, and no house. And even if you can get coverage, you might be stuck with an actual cash value policy, meaning that when the next hailstorm hits, you are going to be on the hook for thousands because the insurance company will not pay that full replacement. So, in the Springs, a cheap house can become the most expensive mistake of your life. So bottom line, guys, in this market, a bargain is rarely a bargain. Whether you're using your VA loan or a conventional one, you need a house that can stand up to Colorado's weather and the insurance company's scrutiny. Do not let a cute kitchen blind you to that $20,000 foundation issue. Buy smart, buy move-in ready, and just save the stress for the move and not the repairs. But listen, even if you find the perfect sturdy home, you could still end up broke if you just don't understand the math behind the move. Which is going to bring us to mistake number 2. The next big mistake is that budget math illusion. Let's say you're looking at like an E4 to E6 BAH range, so roughly $2,100 to $2,500. Or you're a civilian professional within that same kind of general budget. You hop on a mortgage calculator and then you see $2,200 in principal and interest payments. And you think, perfect, I can't afford this. Wrong. If you're using a VA loan, you might have forgotten the VA funding fee. For my conventional buyers, maybe it's that hidden cost of private mortgage insurance. For my military buyers, that VA funding fee just added $10,000 to your loan balance. That's an extra $65 a month. And then for my civilian friends, if you aren't putting down 20%, your PMI is going to cost an extra $250 a month or more. And for any buyer in 2026, homeowner insurance in the Springs is no joke. You need to budget at least $300 a month for insurance. So suddenly that affordable $2,200 payment is actually going to be $2,800. If you don't account for this now, you are going to be house poor the second you move in. Your actual monthly payment is going to be hundreds of dollars higher when you add everything together. To prevent house poverty from ever happening, you need more than just a rough estimate. Do not settle on a 5-minute pre-qualification online. In a market like this one, you want a lender who can actually verify your numbers and walk you through what you can realistically afford. I've linked 2 of my favorite local lenders in the description below. They specialize in both VA and conventional loans, and they know exactly how to factor in your local 2026 taxes and insurance rates so you know exactly what your real numbers are going to be before you even step foot into any sort of kitchen. Please reach out to them. It is the smartest first move you can possibly make. Now, mistake number 2 was all about the math you are going to see on paper. But mistake number 3 is about the costs you don't see until it's too late. A lot of first-time buyers fall in love with that brand new master plan feel. I'm talking areas like Banning Lewis Ranch or some of the newer development areas in Falcon. They see the pools, the fitness centers, the manicure parks, and think, yep, this is my dream. But that dream comes with a lot of hidden fees some buyers really don't think about. First, you have your HOAs. Those are your private membership fees for all the fun stuff the community has to offer, so the pools and the gyms. But here's the one that kind of catches people off guard. There's also Metro District fees. So think of Metro Districts like a mini government for your specific neighborhood. Because the city didn't pay to build the roads, the sidewalks, the streetlights in these newer areas, the developer did. And now the developer is going to be passing that bill on to you. In 2026, these Metro District fees are essentially an extra layer of property taxes. While an older home in more established parts of the Springs might have just a standard tax rate, a home in a Metro District can cost an additional $100 to $200 every single month just for the privilege of having a very nice sidewalk. So if you're looking for a $450,000 home in Banning Lewis Ranch versus a $450,000 home in a more established neighborhood like Cimarron Hills, the new one could actually cost you about $300 more a month when you combine the HOA and the Metro District tax. So, my advice is if you want the amenities, just buy the new build. They are totally amazing, but just make sure your lender is calculating the actual tax bill for that specific Metro District and not the county average. Do not let a pretty neighborhood break your bank account. And finally, we have mistake number 4. And this is the one I really think a lot of people don't consider, and that's how much time they are willing to spend in their car when they're commuting. So look, a lot of people fall into this trap of thinking their drive is going to be short when it's actually not. Colorado Springs is not a small town anymore. That 10-minute drive you see on Google Maps at 9 p.m. is going to be a total lie compared to the morning rush hour. Right now, the city is working on expanding, but the Powers Boulevard and I-25 remain a total nightmare during peak hours. If you're on Powers, just be prepared to hit a red light every couple of minutes. If you're on I-25 during rush hours, certain stretches feel less like an actual freeway and just more like sitting in a parking lot. You have to decide on your comfort level before you buy. If you want that brand new house out east in Falcon or maybe way up north in Monument, but you work down south, just be prepared to spend a massive chunk of your life in traffic. My opinion, sometimes it's worth compromising on that new feel to just get your time back. Here is my recommendation based off of location. So if you need something more central, I would look at Briargate or the Cottonwood area. If you work out at Peterson or Schriever, then Cimarron Hills is going to be really affordable and just right in your backyard. For my Fort Carson families, I would recommend Security Whitefield or Fountain. So don't just fall in love with the house. Make sure you can live with the drive, because a beautiful home feels a lot less perfect when you're spending hours behind the wheel just staring at brake lights. All right, so let's wrap this up. Buying your first home in Colorado Springs doesn't have to be a total nightmare. Not if you have someone local like me helping you every step of the way. If you're PCSing this year, or you're a local first-time buyer ready to stop renting, you really need a realistic game plan. My contact information is in the description below. I would just love to chat and just look at your specific situation to help you avoid any sort of expensive mistake before you get here. If you want more tips on starting your search, check out this video right here, where I do a deep dive into the first-time homebuyer journey. And if you are still trying to figure out which neighborhood fits your lifestyle best, go ahead and check out this playlist right here. Thanks for watching. I am Chrissy Terrell with Pink Realty, and I'll see you in the next one.